Hello everybody and welcome to TI, Apply and IRU's European Road Freight Rate Benchmark webinar for Q1 2022. We'll just wait a few moments for the attendees to stabilize and for everyone to join, and then we'll get started in just a moment. Okay, thank you everybody for joining us. Once again, welcome to the TI, Apply and IRU Rate Benchmark webinar for Q1 2022. I thank you all for joining us. It's a very interesting quarter, a very interesting time in the European road freight market. So lots of very interesting topics to discuss today. And I'm sure there'll be lots of very interesting questions in today's webinar too. So just a little bit of housekeeping before we get started. The session, the presentation itself will last about 30 minutes or so as we go through some of the key rate drivers, and then we'll open up to a Q&A session at the end, which will last approximately 10 or 15 minutes. Please do feel free throughout the webinar to submit your questions using the questions and answer tool through the Zoom app on the webinar. We'll do our best to answer any easy questions in the chat as the webinar goes on, and then also to answer some of the more detailed questions between the panelists at the end. Now, it has been, as I say, an extremely interesting few months in the road freight market. I think as 2022 opened and began, we maybe were looking forward to a slightly more stable year, even though we all knew there was a lot of inflation in the market, a lot of disruption still from COVID. I think we were all maybe hoping for a bit more settled time, but actually, of course, the world isn't quite like that, and we've seen more disruption following on from the economic issues around inflation and recovery from COVID, but of course also with the Ukraine conflict and the knock-on effects from that. So we're seeing a price inflationary environment at the moment, and that's even before we get into the more nuanced issues of the individual lanes, challenges, on lanes from the UK around still Brexit ramifications, challenges, in Italy and Spain with industrial action, and obviously with some of the demand side issues, and of course with all that inflation and fuel price rises that we're seeing at the moment. So much to talk about today, and I'm looking forward to getting into it all with our panelists. So if I can just introduce myself, I'm Michael Clover, I'm TI's Head of Commercial Development, and I'm your host today. And I'm from Transport Intelligence, the strategic market research provider for the logistics industry, providing our view on how we see the market developing and helping you plan for the future. I'm joined today by one of our economic analysts who leads some of our road freight rate analysis, Nathaniel Donaldson. Thank you, Nathaniel, for joining us today.
Hello, everyone.
And I'm also joined by our partners from Apply and from IRU. First of all, Thomas Lariou, that's Apply's Chief Executive Officer. Welcome, Thomas. Thanks for joining us. Would you like to give a quick overview of Apply, just for those that don't know Apply already?
Hi, Michael. Yes, with pleasure, of course. Hello, everybody. So Apply, you may know it, but Apply is the European leader in market insights regarding data for road transportation, air freight, and sea freights. And basically, we are collecting transactional prices from shippers and carriers, freight forwarders, to then display it on the market via benchmarking tool and some analytics and trends or indexes.
Thank you, Thomas. And we're also joined by Marianne Savoni, a Senior Manager of Strategy and Market Intelligence from IRU. Thank you for joining us, Marianne. Would you like to give a quick introduction for IRU for those that don't know the organization?
Yeah, thanks, Michael. Good afternoon to all. IRU is the International Road Transport Organization, representing both goods and passenger segments. We are present in more than 80 countries, globally speaking, and we count more than 170 members, being national road associations, large transport companies, and as well shippers and service providers in logistics.
Thanks, Marianne. So before we just get started and allow our panelists to give their views onto what's driving rates, I must also just Remind you that all discussions and statements made by participants on commercially or strategically sensitive information may fall within the scope of competition law and be considered as unlawful. We therefore invite you to refrain from sharing any information of such nature or entering into such discussions, including during breaks during the webinar session. But now on to the first of our content slides. And here we're looking at the overall development of pricing in Europe. And I think it will be no surprise to anyone listening that rates have, of course, increased quite steeply over the last quarter, and indeed following on from many quarters before that of price increases across Europe as well. Nathaniel, could you give us a bit of an insight into what's driving that?
Sure. So when we look at our European benchmark, it's now increased for the fourth quarter in a row. It now sits at 110.9. Now that's up 4.3 index points quarter on quarter and 7.5 index points year on year. So what we're seeing here is mainly supply side factors which have pushed the index up to a new all-time high. Now, continental-wide driver shortages, rising costs, industrial action, have restricted supply and increased the haulier costs across the continent. Now, the invasion of Ukraine has compounded the existing supply pressure as Ukrainian drivers leave the workforce and conflict pushes up, the rising oil and in turn the diesel prices. So meanwhile, we're also seeing high inflation across the continent. Now, this is reducing consumer confidence. And we're also now expecting interest rates to rise, which is deterring business spending. And in turn, what we're seeing is limited demand for road trade, and it looks like it's going to be a limited growth in demand. But the supply side effects are definitely pushing up the prices, the European rates.
Okay, thanks, Nathan. Yes, it's a potent mix of different factors there. And I think a really interesting dynamic in this quarter is, of course, that we see all these supply side issues pushing rates up, and we're going to take a closer look at fuel prices and labour shortages and labour costs as well in just a moment. But of course, we're also looking ahead at the coming quarters, and we're seeing demand sort of slackening off a bit. In terms of volumes expected. So we've got a very interesting dynamic over the rest of the year in terms of that supply and demand mix on the road freight side. Now, if we move on to our next slide here, this is just showing us our sort of average European pricing for diesel, and obviously we can see a huge increase there. Nathan, could you just tell us a bit more about that?
Yeah, definitely. So we're seeing high inflation at the moment, and we really need to focus on the diesel prices because these are leading the increase in prices throughout the continent. So while supply and demand remain the main determinants for road freight, diesel prices actually make up around a quarter of the running costs for road freight operators. Now, in this graph from TI's dashboard data, we can see a steep rise in Europe's diesel prices in quarter one. And actually, in Europe's average weighted diesel pricing, we're seeing just below a 13% increase in quarter one alone. Now, diesel prices have been rising since 2021, quarter one, but is by far the largest we've seen since then. Now, while carriers have historically been protected from full price spikes thanks to bulk purchasing agreements, it does look unlikely to protect them into 2022 with the high diesel prices, and these increased costs will then be passed on to the consumers, which we can see, to the shippers, which you can see here. Now, with major economies looking to move away from Russian oil, it's likely that the increased competition for alternative sources of oil will keep these oil and diesel prices high into the 2022.
Great, thank you, Nathan. Yes, we're certainly seeing a trend that way, but we're obviously looking at all the issues really driving costs in Europe as well. And one of the other very important areas, of course, looking at labour and the supply of drivers, and that has been also very heavily affected by the situation in Ukraine, already a difficult situation. We've got some great data here from IRU, which is showing driver shortages with the latest data. Marianne, could you just give us a bit more information on that?
Yeah, many thanks, Michael. As we all know, the availability of truck drivers has long been an issue in the EU road freight market. At the end of last year already, before the Russian-Ukraine war, up to 425,000 truck drivers' positions were unfilled, according to IRU analysis, and from which, as you can see on the map, 80,000 are in Poland. So amongst many impacts that have and will be felt following Russia-Ukraine war is a potential additional loss of labor from EU logistics sector, knowing that more than 160,000 truck drivers coming from Ukraine, Belarus, Russia were working in Europe. Poland and Lithuania are the countries in the EU employing the highest number of non-EU drivers. If you take the example of Poland, nearly 30% of drivers are working in international transport or foreign, and mainly coming from non-EU countries. And on these 30%, the majority of those drivers are Ukrainian, so around 35%, and Belarusian counting around 20%. So with the war in Ukraine, there are also situations in which the resident cards and also the working visas of Russian and Belarusian drivers were not extended, while some employers in Europe have terminated labor contracts with Russian and Belarusian drivers. So this is what we can say here on notably on the impact of the conflict on the travel shortage and the dynamics we could expect.
Yes, thanks, Marianne. And this is also an issue which I suppose is somewhat compounded as well by some of the issues around the mobility package and changes there on driver posting, somewhat limiting capacity too. So it's adding to the mix of restrictions or restraining the supply of road freight capacity there as well. But we were really also looking at this impact. So we can see the driver shortages. We know that's an acute problem in Europe. And we also want to try and measure the impact on rates as well. And you've been kind enough, Marianne, to outline some of the issues around driver availability from Ukraine, from Belarus, from Russia, and how it affects the Polish market. But could you give us a bit more insight on that in relation to the rates as well?
Yeah, so we can see on the graph the direct effect, I could say, on the combined effects of the driver shortage increase and also the fuel price increase. And we can really see that these two factors are contributing to this increase of Polish freight prices, notably on the last quarter. Rates on lanes leaving Warsaw reached an all-time high Q1 2022, rising 2.8% over the previous 3 months. The effect is also likely to be felt widely across the region, with Polish carriers providing around 20% of the EU market's capacity. However, what we can also mention is that the sanctions and the imposed restrictions have significantly reduced the range of goods available for transportation in both directions. And limitations on transit and the potential threats of closing border crossing points, for example, the ban on entry of Russian and Belarusian operators to the EU in the scope of the fifth package of sanctions, may lead to a historical decline in the load trips, meaning that fewer operators, vehicles, drivers could be needed. So this is something to highlight here. And just to finish on this lane, in order to mitigate risks or avoid bankruptcies, transport operators need to redirect their operations to other routes or markets. Could be in the scope of the European internal markets and or diversifying their operations to other international markets, such as Turkey, for example.
Yes, and there's certainly a shift in volumes we're seeing in response to some of the challenges of needing new routes as well. So very interesting, Marianne. Thanks for sharing that. And of course, we'll be diving into more individual lanes soon. Obviously, the data set from Upply does provide coverage across Europe, and it's very interesting to look at the individual factors. But it's also just worth taking a look at the different rates across Europe and thinking about the scope of coverage. As Thomas mentioned at the start, Upply provides the road freight rate data we're analysing here. And Thomas, would you just give maybe a quick overview of the coverage of data, and then we can move on to some quick notes about the methodology before we dive into the individual lanes.
Yeah, of course. I will try to answer also to some questions that I see on the Q&A that are linked to the methodology. Here you have a map of the coverage that we have Europe. Of course, some examples only on some origin destinations, but you can type any kind of origin destination, and then you have a confidence index regarding the coverage that we have on this specific corridor. We have today about 20 indexes across Europe for road transportations, and we are using some of them here in this webinar and in the report that you will receive. Regarding the methodology, very briefly, this is a full truck prices for full truckload general cargo. What you can see are prices including the fuel. So this is an important part. There were a question just before the previous graph that you have seen. It's a full truck price. This is not a price euro per kilometers. It was the price was 1,200 and something. And the main idea is that we collect these prices. These are invoices directly that we collect from shippers and freight forwarders that are selling prices that the shippers are receiving, including the fuel. Right now on the slide, including spot and contractual prices. This is a median price that we are using to see the evolution over the past years on the last quarter, as it says. And of course, spot contractual, then you can have a split directly on the website of Upply. You can see many others specifications, but here we are including both FTL, general cargo.
Brilliant, thanks, Thomas. So bear that in mind when we're looking at the individual rates here as well. So looking at that euro price and the average of that lane. And we'll come, I think, first of all to this one of Europe's higher volume lanes. We're looking at Madrid to Paris, and we see some very interesting dynamics and price increases, particularly from Spain to France leg over the last quarter. Nathaniel, could you give some insight on this?
Yeah, sure. So this is our first major European lane. Now it's an interesting one because the lanes have actually switched for the third quarter in a row with their head haul and the back haul switching. Now, rates into Paris have been rising since 2021, quarter one, and they grew by 5.9% in the latest quarter, so in quarter 1, 22. They're now sitting 14% above their rates a year ago. Now, in contrast to other lanes, in contrast to other routes, this is a route that's dominated by demand in quarter one. So we have a booming French economy with the lowest unemployment rates in 10 years, alongside the highest GDP growth in 52 years. And we've got high levels of French government spending. Now this is fueling consumer spending and business spending. And with no change in government, we'd expect this to continue into the year. Alongside this, we've got relatively low levels of inflation in France compared to the rest of Europe. So this is driving up the rates with high demand, and then alongside the supply side pressures that we're seeing. Now, on the other side, when we're looking at rates into Madrid, this actually fell by 2.2% in the latest quarter. Now, this reflects quite a low level of Spanish demand, with Spanish industry prices increasing by 40 points in February alone. The PMI is falling, we're seeing less demand from industry. And while Spanish consumers face 9.8% inflation at the end of quarter one and increase in CPI. So what we're seeing here is low levels of demand from both consumers and businesses from Madrid.
Mm. So quite different stories there in Spain and France, and that difference in demand really governing some of the price changes we're seeing there. Thank you, Nathan. We'll move on now to another major lane. This is looking at Paris to Duisburg, so France, Germany trade we're seeing here. And again, you can see some quite substantial increases on this lane. Marianne, could you take us through that?
Yeah, absolutely. So as you can see, so the rates from Duisburg to Paris is seeing an increase quite important since the Q2 2021. So this is notably mainly due to the fast economic recovery of France that we see since now a few months in the scope of the COVID recovery. Also, what we can say here is that the driver shortage is also impacting a lot the French market, and also Germany. You saw in the map previously that Germany was one of the countries the most impacted by the driver shortage. So here a lot of actions are implemented by the governments, notably the French government, to indeed try to improve the image of the profession, notably via specific trainings to done with transport operators to put really to improve the image of the sector. Yeah, so this is what we can say here. And we can see in the estimations that this economic recovery is expected to slow down in the coming months, notably due to the situation in Ukraine and the impact on road transportation on this, specifically on this lane.
Yes, thanks, Marianne. Yeah, very interesting to see that the impacts coming through there onto prices. And then the last lane, really, we've talked a little bit about Polish road freight rates already, but we're looking at this lane, which is Warsaw to Duisburg. Again, this is really one of the highest volume lanes in Europe, and we're seeing price increases on both head haul and back haul there. Nathan, could you just take us through that?
Yeah, sure. So with this lane, we're actually seeing both legs, the head haul and the back haul, hitting all-time highs. Routes on the head haul into Duisburg, we're up 5.1% quarter on quarter, while the back haul rates to Warsaw, we're up 5.4% quarter on quarter. Now, this route has probably been most heavily affected by the Ukrainian conflict, as we've mentioned. We've seen Ukrainian, Belarusian and Russian drivers leaving the labour market. Now, this has widened the labour gap and pushed wages up and lowered capacity for Polish haulers, who actually, as Marianne said, provide 20% of the capacity in Europe. Now, we can expect this supply side pressure to continue to push rates up in the coming months. But as Marianne mentioned, the German economy is at the moment faltering. Now, projections for growth have been halved by the Council of German Economic Experts. So we can expect less pressure from demand, less pressure pushing up rates in the coming quarters, but we do expect this pressure from supply to continue.
Yes, so possibly slacking off the price increases, but may see further increases in the future there.
Yes.
Okay, well, we'll turn now across from international lanes, and we'll look at some domestic rates actually, and just have a look here at what's happening on price development. In this case, in Spain, we're looking at index here of aggregated Spanish domestic rates. Marianne, could you shed some light on the price increase we've seen over the last quarter?
Yeah, so clearly this is a very dramatic increase on Q1 of this year, reflected by the strong increase of diesel prices. In Spain, the diesel prices rose by 30% in Q1 2022 only. And when you compare with January last year, it is an increase of 63%. So rates have reached an all-time high following a 6.2 increase between Q4 2021 and Q1 2022. Spanish industry is facing the largest price increases since records began, with industrial prices up 40% in February alone. At the same time, consumers are facing an inflation, one of the highest one in Europe, of 9.8%. The measures announced by the Spanish Ministry of Transport include a direct aid of 20 cents per liter of fuel. And also, in addition, an aid is also granted to road transport companies according to their vehicle fleet. So it is about 1,250 euros for a truck and about 500 euros for a van in terms of financial support.
Thank you, Marianne. Yes, interesting to see those measures coming in to support the industry there, and try and control or manage pricing a little bit as well. Now, we can also look at another somewhat troubled market in terms of the road freight industry and industrial action that we've seen in Italy over the last few months. Obviously, we see some rate increases here on the index there. Nathan, could you give us your views on that?
Yeah, sure. So the Italian market subject to the same supply side factors that a lot of the other markets in Europe are struggling with. And now, in addition to that, they're also struggling with some industrial action. Now, that affected the international lanes more heavily than the domestic lanes. So we'll come to that in a moment. But for the domestic lanes, the increase was actually slightly dampened. So we see a slightly smaller increase. So we've got an increase of 3 points in quarter one. on our index. Now, this was minimized by a falling level of Italian consumer confidence, and we've also got some falling output, falling PMI in Italy. So in March, the PMI stood 4.5 points lower than its Q1 average. So the effect is that while costs and supply restrictions are affecting the market, it's actually being dampened by quite weak Italian domestic demand.
Okay, yes, even so there, we can see in both those domestic markets quite a difficult situation, I'm sure, for road freight operators to navigate in terms of managing those fuel price increases, but also for shippers, of course, seeing those price increases coming in. And another domestic rates here, looking at the rates in France from Upply's freight index here. Again, you can see a very high increase there as well. In this time in cost per kilometre. Thomas, could you just explain what's driving that?
Once again, of course, the diesel price is still a major impact, but in France, we have also a quite a good demand and healthy sales that remains at a good level. We are plus 1.5% in the first quarter of 2022. I mean, this is still good and better than many countries in Europe. Regarding the inflation, also the level of inflation is quite. I mean, it's below the average in Europe. We are in 4.5% in France as inflation, when you have Europe that is at 7.5. So this is a mark of quite healthy internal demand and internal consumption, but we need to be quite cautious because the sign that we see and the insight that we have from the market on the current months and the following months is not that good, and it seems that the demand is start to decrease a bit.
Yeah. So again, looking ahead at that, there may be reducing demand coming ahead. So interesting things to think about as we're planning for the next few months and quarters out the rest of 2022. Obviously, volatility will remain in place on pretty much all routes and markets, I suppose. So thanks for your insights there on our domestic rates there supplied by Upply. We're also looking at a couple more international lanes now of particular interest, and we've looked at the Italian situation on domestic level, but here we're looking at average prices on export lanes from the Italian market as well, and Nathan's can offer some views on what's driving these significant price increases again in the last quarter.
Yeah, thank you, Michael. So this is definitely an interesting one. So when we look at the average prices from Milan as an origin, we're actually seeing an average increase in Q1 of 7.1%. Now that's actually more than twice the European average in Q1. Now this is largely as a result of industrial action in response to rising diesel prices in Italy. So this industrial action was organised by the Italian Transport Union. Now it was aimed on putting pressure on the government to help smaller firms and owner-operated firms who are struggling with the rise in diesel costs. And what it did is this restricted the supply in the country, and it also caused anxiety and caused a rush of demand from shippers looking to avoid delays and get their goods out of the country. So then we saw this high 7.1% increase in the quarter. Now the Italian government has responded with a reduction on the fuel duty for the month of April. So this will reduce the cost of diesel at the pump by 22%. However, this will end on April 31st. And while it is also accompanied by a €400 million package to protect the transport sector, it's uncertain how well the hauliers and the smaller firms will respond to this in Italy. And we do expect the diesel prices to continue to cause pressure in the coming months when this duty is put back to its higher rate in May.
Okay, so yes, a bit of a few different factors driving price increases there. The last lane we're going to cover today is looking at rates on export lanes from GB, from the UK to the EU. Another lane with a very complex mix of factors driving rate change there. Obviously, you see lots of increases over the last few quarters there. But we see on this lane a lot of the same kinds of issues affecting rate development as we've seen on other lanes. So of course, the increasing fuel prices, the UK has one of the highest fuel price increases over the last few quarters in Europe. We also see issues with more general inflation on this lane. But one thing that's also very interesting is, of course, the volume of exports from the UK has fallen substantially over the last year or so. So demand on this lane is actually considerably lower than it has been in the past, and that's in part due to the changing in trade, of course, between the UK and the EU, or particularly from GB itself to EU, but also driven by the challenge around actually finding capacity from GB to the EU. So we see, of course, the same dynamics of a large trade deficit for the UK with the EU, and those volumes always going more in the direction of imports into the UK. And of course, it's always been somewhat priced into the lane going into and prices going into the UK, where hauliers obviously need to account for the fact they may not get a return load, a backload on the return leg back to the European continent. That's also been added to by the disruption we've seen around Port of Dover and the Channel crossings over the last quarter or so. We've seen that from the issues around P&O ferries with the reduction in capacity, although some of those ferries are now starting to run for freight once again this week. And also some issues we've had with other ferry operators, which you usually get it in the course of things. But we've also seen other issues around some of the software, so the chief customs software and GVMS software having issues over the last sort of month or so of the quarter in question, causing longer delays as well on this particular lane. So a real series of some issues here really driving up pricing on this lane, and really over the next few quarters we hope that some of the capacity issues on the Channel crossing will be relieved and resolved over the coming quarters, but those more structural issues around trade patterns and trade volumes are likely to persist, so we can expect to see continued disruption on this lane really. Okay, and that brings to a close our session in terms of the rates and the presentation. But of course, we're now open up to questions and answers. One thing I'd say before we move on to the Q&A session is please do feel free to submit those questions. We've got quite a few that have come in already, but don't shy on adding more as we go through the Q&A session. And also just a quick answer already that we will of course be providing a copy of the report to all attendees after the presentation, so you should all receive a copy of the report with the detail of what we've been discussing today in just a few moments. So we'll turn now to questions. I can see we've already had quite a few. One area that we haven't gone into huge detail on during the presentation so far is the impact of the mobility package. So perhaps we could start there with Marianne, who's probably best placed to answer that. So we have a question here. Any impact from the mobility package yet? Marianne, could you answer that?
Yeah, sure. So just as a reminder, the new rules on the posting of drivers came into force on the 2 February of this year, and the new rules on the access to the profession and to the road freight market was also on February, the 21st of February. So what we can say today on the impacts on the costs, yet the impacts on cost and rates are still limited, as many EU member states are lagging behind the obligation to transpose and publish the information on the conditions applicable to posting in their specific countries, including the critical information on driver remuneration of the host country. So the same is true for specific aspects also regarding access to the markets and access to the profession. To date, the European Commission has started infringement procedures against 22 member states, meaning that no more than 5 countries, in fact, could be considered as fully in order. So in order to estimate an impact today, it is quite still a little bit early. What we could say, however, is that the potential capacity constraints and therefore impact on costs and rates is notably linked to the mandatory return of the vehicles to the member state of establishment within an 8-week period. These changes could hinder ongoing efforts to reduce the number of trucks on the road, so meaning an increase of the fuel consumption and CO2 emissions, and so reduce efficiency through additional empty returns. Also, other measures are also closely monitored by the transport industry, notably the 4-day cooling off period introduced for cabotage operations. So this is what we can say today in terms of impact. We are going to have a better view in the middle of the year in order to be able to size a little bit more the impact. But this is the status of where we are standing, notably on the mobility package enforcement, I could say.
Thanks, Marianne. Yes, so still in some ways it remains to be seen. It's hard to tell with until things are fully implemented there. Thomas, I can see you've on the question app suggested that you'd like to answer the question on what the methodology and the prices are related to FTO. Would you like to just give a quick answer to that one?
Yeah. Sorry, I wanted to just say that was answered at the beginning, but just quite quickly for Antonio, this is full truck prices. It's a median prices, so it's median prices for full truckloads. It includes both spot and contractual prices in this slide over there. You can have the split on upply.com, and fuel is included.
Great, thanks, Thomas. And I don't know, while we're on the subject of methodology, there's another question here about coverage of other modes. Would you just like to give a quick view on that?
Yeah. Regarding the other mode of transportation, so we have air freight and sea freight also, but if the question was regarding the multimodality, it's a good point. Today we don't have any indexes internally of multimodality in Europe. We have the train part between Asia and to Europe, but not across and within Europe.
Thank you, Thomas. Now we have another question here on the impact of driver shortages, and there's a few questions on this. There's one looking at, do we expect to see consolidation in the market based on driver shortages? Well, there's lots of different factors driving consolidation in the road freight market at the moment, and we're seeing a lot of prospective deals coming in. We know that we've seen consolidation recently within the sort of digital road freight space and some of the sort of fast-growing digital road freight forwarders consolidating there. But we may well see more consolidation, driven in part by driver shortages. And the need to obviously secure capacity or the ability to provide capacity, but really there's a whole mix of factors driving that as well. And one thing that actually we may see around fuel price increases and driver shortages as well is that it could cause company failures and business failures, which may lead to a more consolidated market in the end as well, as we see that progress. So a few different factors shaping that. But we've also got some other questions really about, just for more information on the driver shortage and maybe a bit more about how the war in Ukraine is impacting driver shortages. So Marianne, would you like to share your views on that?
Yeah, so as we mentioned, in fact, this is, exacerbating or increasing already a tense situation in terms of driver shortage. So as we mentioned, 160,000 drivers are coming from Ukraine, Russia notably. So meaning that we miss today this additional, I could say, drivers in the EU markets. The question is how much it is going to increase the shortage, or is it going to remain at the same level of shortage? Because in the same time, as we said, we are going to observe, and it is already the case, a decline of trade. So if there is a decline of trade, depends on in terms of level of demand of drivers, is it going to be adjusted or, so we believe that the Ukraine situation is going to, in fact, maintain the tension, and we are going to monitor more precisely what is going to happen in terms of, notably in terms of trade, road trade volume, and notably at the key border crossing points in Poland and Lithuania, notably. How many trucks are going to be able to continue to pass the border? Is it going to, we are going to expect border closures? This is very uncertain time, so we need to continue to monitor, and of course the impact of driver shortage is going to be there in a way remain there.
Yes, it really is an awful lot of uncertainty there about the impact. We don't quite know how it's all going to develop at this stage, but it's good to understand more about what those possible scenarios might be and the impacts, could be as well. Nathan, would you like to give a quick answer to the question around the Duisburg Paris rates?
Yeah, sure. So I think this question was from Michael Cordes. So in terms of the Paris to Duisburg, what we're generally seeing is that Duisburg and the German economy as a whole is really struggling to recover from the pandemic, especially its manufacturing sector. We are seeing some increases in PMI, but they're not very strong. And so we're not really seeing the high demand from German manufacturing demanding intermediate goods for producing its outputs in the factory. And we're also seeing very little growth in the consumer confidence in the German economy as well. So we're not really seeing that demand pressure pushing up the rates, and even while supply pressures might be pushing the rates up, the demand is not doing enough to really bring those rates up considerably.
Thanks, Nathan. And we've got a couple of interesting questions coming in now. One here from an anonymous attendee, actually, but are you seeing any increase in demand for greener haulage caused by these increasing diesel prices? Well, certainly we've seen, within the market, increasingly high focus on emissions and fuel consumption over the last few quarters, and obviously that's just brought into sharper relief from as diesel prices rise, of course. So yes, for really long-term factors as well driving that too. But of course, there's still the issue around people who want to be using more modern vehicles, more efficient vehicles, of course, to secure that kind of capacity. And fortunately, there's a bit more visibility coming into the market now with more digital solutions and the opportunity to show what the expected emissions are from many carriers now on different routes. So that's certainly something that is easier to make a decision on as a shipper and bring that into part of your decision-making process. And obviously, it's driven by that sustainability goal that of course remains very important, but also, of course, by those substantial cost increases as well. And another question from Neeraj coming in here, which is looking at the economic situation really. So with the increasing inflation, there seems a possibility of demand destruction possibly by Q3 2022. Have you assessed that? How do you see freight rates in Europe in Q3 2022? Yes, well, we talked a little bit about the outlook so far. Obviously, we're expecting the cost environment and the supply side challenges that we see around driver shortages and so on to persist. And obviously those exert a upward pressure on rates as supply is constrained by all of those issues. And obviously fuel prices obviously drive up rates. But I think as Marianne and Nathan both mentioned, we're expecting demand to wane a little bit over the course of the year. So in Q3 22, Nathan, I think we'd be right in saying that we think that's certainly going to be demand, or the lack of demand, or slowing demand growth will certainly reduce the upward impact on rates. Would you agree?
Yeah, I would definitely say so. And this is something that we keep an eye on, using consumer confidence to determine where we expect the demand to go by countries. And this is something that we definitely consider. So when we come to Q3, we'll definitely look at the demand environment, look how the consumer, which direction the consumer confidence is looking like it's going, and then determine how we believe that'll affect the market.
Yes, thank you, Nathan. And I think if you do want more information on the outlook for the road freight market and road freight demand, it's very difficult, of course, to do accurate forecasting on pricing development because there are so many different factors contributing to the overall outcome. But something that we do here at TI as well is to forecast overall market growth and development, so you can see how demand is expected to change. We'll be publishing our new figures on that in just a few weeks for the European market. So that's something else. You can take a look at it if you like. Now, that's I think at the end of our Q&A session there. So thanks for everyone for your questions. Thanks very much for your answers as well for my panelists. Obviously, if you want more information from any of the three parties providing the presentation today, please do feel free to reach out to us. I'm sure you would be very happy to hear from you with any questions around mobility package, around the driver shortages and policy issues across the European and global market really. Apply, of course, if you have those detailed requirements for more data, benchmarking data on the road freight market. And if you'd like to understand the future of the industry and how we see the market developing, then TI would be very happy to help you as well. So thank you everyone for joining, and for my panelists especially. So thanks to Nathan, thanks Thomas, and thanks Marianne for your insights and views today. And thank you all for attending, and we look forward to seeing you next time.